Hello everyone and welcome. Thank you for viewing this video. I am Rebecca, your insurance lady, and in this video I will help you to understand how insurance works so that you are better equipped to grasp insurance concepts while you're studying for your insurance licensing exam. Let's start off by understanding what insurance is. Insurance is the transfer of a risk. An individual or business can transfer a risk to an insurance company. For example, we have auto insurance to cover us for accidents or occurrences that can potentially happen and leave us with a significant financial loss. If you wrecked your brand new car and you had to turn around and pay for another brand new car, most of us would suffer. Most of us wouldn't be able to do it. So instead of having to be left with this type of hardship, we decide to cover our vehicle with insurance and transfer that risk to an insurance company to alleviate our financial hardship. Insurance is the transfer of a risk of loss from an individual or a business entity to an insurance company, which in turn spreads the cost of unexpected losses to many individuals. Risks are usually transferred to the insurance company for protection. So rates can vary based on several rating factors, but let's just say an individual is paying $50 a month in premium for 6 months and his car was totaled in an accident on the third month. Per the contract, insurance is required to indemnify or restore the individual, and that just means that they're going to pay the insured for his total vehicle. If the actual cash value is $25,000, that is what the insured will receive minus the deductible. Let's say his deductible is $500. So in the 3 months of his policy, he paid $150 in insurance premium. Insurance paid $24,500 to indemnify him for his total car. Now, look at this in real time. It almost seems like a bad business deal for the insurance company, doesn't it? I mean, for one, the company was never going to make that kind of money from the insured for one policy period. But it is possible for the insurance company to recover after the hit that they just took, because insurance is a social device for spreading the chance of financial loss among a large number of people. What that means is a large number of people pay a company an insurance premium for protection. It could be for your car, your home, an expensive asset that if it were to get damaged today, it would pose a financial hardship to replace. Insurance can also protect you as an individual in the event you are responsible for damages caused to others. If someone sues you for negligence, insurance policies help to alleviate that burden. So you have a group of individuals or insureds paying a premium to the insurer, the insurance company. The premium collected will then pay for any losses that occur within a specific period. Keep in mind, everyone is not going to have a loss. So at the end of the year or insurance physical period, the amount of premium that the company collected minus the amount of claims and expenses paid will determine if the insurance company has profited that year. It's called the loss ratio. All right. That is the video on how insurance works. Thank you for viewing. Please remember to like and subscribe. Check the description below for study material resources. I do partner with Kaplan Financial Education, so use the link below in the description to take advantage of that. Once again, thank you for viewing, and I am Rebecca, your insurance lady. Goodbye.